Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is a morning market prep video for Friday, August 5th. Well, my goodness, it's been quite a week of earnings drama and volatility and price action. And today we have an employment situation number creating a little bit of pensiveness in the market. So what does that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. I do truly appreciate it. We have a pretty darn busy day on the calendar, in the market today, with some uncertainty that's going to begin our day. So let's take a look at our charts, see if we can gain some information about how we might want to approach the market for today. First off, as you can see, I've just left these drawings up here on the chart. We still have that downtrend in play. We still have this significant resistance level in the chart that, we've just been banging our head against. So far, we haven't been able to breach that level here in the Dow, although we are holding on to a nice trend. So this is a bullish short-term chart for sure, with a bearish overhead resistance that makes everybody go, if you remember the old Arsenio Hall show, it's kind of like things that make you say, Well, we're kind of at that point here of that uncertainty, trying to figure out which way it's going to go. But that number early this morning may make that decision for us. So let's just be kind of careful. I think anything is possible here before the open. So bullish on the short term, longer term, we got a little resistance up there to be worried about in that chart. If we take a look at our technicals here on the chart, they certainly have improved dramatically. We have what we call a rounded bottom breakout pattern that's occurred in here with that 50-day moving average rolling over. But kind of keep in mind that it's not out of the question that we could retest that area down here, or retest a little bit of support before we move on through to the upside. And one of the reasons I think that might be the case is this trend might be just a little bit steep. We might need a little more rest in there, but we also have that possibility that we could pop right on through here and head right on up to that 200-day moving average. So keep an eye on that. Then let's take a look at our SPY. SPY, very much the same. We continue to struggle against this downtrend, struggle against this price resistance in the chart, but our short-term upside is certainly bullish, albeit a little bit steep. And we're still holding in a very bullish pattern, and we have some price support right in here. If we were to pull back, we don't necessarily break down this trend. So watch that closely. And as you can see here, we could certainly pop through there on a good number. Now, I'm going to be waiting for that pop. I don't want to be buying a bunch of stuff right here as we test that resistance. I'll wait, break out, hold the higher low, then I'll be interested in trading. So keep an eye on SPY. Our QQQ, very much the same with one little change. First off, we kind of popped, not kind of, we popped through this resistance here in the chart, and we came up here to test that downtrend. So far, we're just struggling against that area, and I will say that I do believe that big tech has been the strongest out there. Awful lot of speculation in it as well, and that this is a little bit overextended. Notice 1, 2, 3, 4, 5, 6, 7 days up. Yesterday we kind of struggled in there. My rule is 5 to 7 days in one direction. Look for the possibility of that reversal. The news this morning could certainly change that, but we'll want to watch that carefully just in case we get that resting pullback in the market. I think probably the better trend is here. That would suggest either a longer consolidation or a little bit more of a pullback. Let's take a look at our IWM. Our Russell also broke through the downtrend. You can see we broke through that downtrend, but unfortunately we have a pretty big resistance level in the chart, still struggling against that level. Here again, we have multiple days up, and we're kind of getting that stretch to the upside here. Might be a little bit long in the tooth, just nothing wrong with that. Maybe just needing a little bit more rest, so we could continue to consolidate, or we could pull back. And of course, if that number brings out the bulls today, we could pop through. And then we'll look to see if we can hold that number, or hold that level. So watch those closely. If we take a look at our VIX, kind of an interesting situation here in the VIX, where although we've been moving higher and higher and higher, our VIX struggles to break the low of a week ago. 5 trading days ago, we haven't been able to break that down. However, we have to give this to the bulls. There's just no way around it. The bulls are in control here. They have held that resistance in the chart, and we continue in this downtrend. One thing I continue to suggest, and I do want to keep bringing this up, is there may be a little bit of complacency building into the market, considering the actual condition of the economy. We'll want to watch that closely, but right now the bulls are definitely staying in control here in that chart. And if we take a look at our T2122, well, our T2122, it continues to be in the overbought area. We continue to struggle around up here. Earnings have certainly fueled this dynamic move to the upside, although the year-over-year numbers are not good. So it's one of the reasons I hate earnings, is because earnings are really become nothing more than a manipulation of market prices. And we've certainly seen that this quarter, but that doesn't mean that we can't stay up here. So we'll want to watch that closely. We downgraded our earnings reports, and then companies have been mostly hitting and doing okay on that. And that moves the market up. But we'll want to watch this area up here, because at any point in time, we could see that pullback begin. Now, a pullback doesn't necessarily mean we collapse or drop all the way back. What we've been experiencing lately in the market is just kind of an all or nothing market. We're just racing in, or we're running for the door. And that's made these ugly whips in the market so extreme. What we could see in the market is more of a rest or a consolidating pullback. So we could get more of a lighter resting pullback in the market, still bring this T2122 down, but it doesn't mean we have to collapse. So just keep an eye on that. We still have that overbought condition here in the market, and we are a little bit stretched to the upside. So can't rule out the possibility of a little rest coming into play. Now, let's take a look at our T2107. T2107 had just a little slight pullback yesterday. Once again, we're continuing to be challenged by this downtrend, and we're waiting to see, can we finally break that downtrend, hold the higher low, and move higher? Yet to be determined in the chart. That little bit of pullback, maybe bringing just a little bit of a pause in, as that uncertainty of that employment situation number is pending. So watch that closely. 28% of the stocks holding above their 200-day moving average. And our T2108 pulled back just ever so slightly, just 69, about 70% of the stocks holding above their 40-day moving average. And one of the things we'll want to watch here in the chart, we've got a pretty big level of price resistance in here, and having stretched so much to this upside, we do have to wonder if maybe we've pushed this just a little bit too much with a little bit of over exuberance, and that we get a little bit of rest or pullback in the market. But again, that employment situation could change everything. Now, if I'm going to skip right over T2101 this morning, and the reason I'm doing that is because when we look at volumes here yesterday, they were not good. Volumes continue to be weak, but yesterday it kind of was understandable. We were just in a wait and see choppy price pattern, waiting to find out what this employment number might be. If you remember, the jobless claims rose just a little bit more than expected. So there is that little bit of uncertainty as to how that number may come in. So watch that closely this morning. Now, how we interpret that number is going to be an interesting question, because we know the FOMC wants the market to slow down, wants that to pull back. So they're really kind of looking for that jobless claims, or excuse me, not jobless claims, but that employment situation number to drop. That helps them see that what they're doing is actually working. If it doesn't drop, if it increases, I can't tell you. Normally a jobs increase would create a nice bullish move, but it's also possible that we get a jobs increase because of our inflation situation, and the market reacts negatively to that because that really promotes the Fed pushing harder on rates and reducing money supply. So kind of an interesting dilemma here today that we'll have to watch carefully, and I really think anything is possible. So what I've been talking about here this morning is that employment situation number on the calendar. It's coming out before the bell. Interestingly enough, the Econoday consensus is suggesting that that number declines from our last reading of 375,000. And we have a report in CNBC out this morning suggesting that the number will be strong. So predictions are all over the place. And remember, it really doesn't matter what the prediction is. It's how the market reacts to the actual number that matters. So keep a close eye on that this morning. And then we're going to have Baker Hughes rig count and the consumer credit number coming out. Now, keep in mind, consumer credit has been moving higher. As a matter of fact, we saw consumer debt hit $16 trillion, a new record high this week. So our consumers are stressed. They've been running up those credit card bills pretty high. We'll have to keep a close eye on that if that continues, because that does not bode well for a consumer-based economy. Let's take a look at our earnings calendar for today. Now, our earnings calendar, we do get a little bit of a break. We've got about 100 companies listed on the calendar, but a large number of them are unconfirmed, and quite a few of them are very small cap, not very notable stocks. So this morning, we have a few that we'll want to pay attention to. AWW will be reporting today. Now, this has just been an amazing rally heading toward earnings. There must have been some news in here. I don't know. What you're seeing here is truly a parabolic move. I would be very, very careful as to what happens here. So watch that closely. We've got BEP on the list today. Keep an eye on that. We're going to have a little bit of cannabis. CGC, we've been seeing a little bit of a pop-up in some of the cannabis, but it looks like CGC is running into a little bit of trouble here at price resistance. DKNG reporting today. Looks like they're moving higher. We like those gambling stocks, and we'll talk a little bit about that here in just a bit. We've got Goodyear Tire on the list. That's moving higher here this morning. We've got WDC on the list, just ever so slightly higher this morning. And Wow is on the list here for today. If you want that full list, I think I only missed one, GOG. This morning. So keep an eye on these reports this morning. Let's take a look at GoGo. Sorry. Let's take a look at some stocks that could be setting up for today. But before we do that, guys, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, please do me that favor. Continue to click those thumbs up buttons, leave that brief comment. It helps the channel to continue to grow. I do truly, truly appreciate it. Channel is growing. We've slowed down a little bit, but that's okay as the channel gets bigger. But you guys are doing your part, and I truly, truly appreciate it. Thank you so much. Let's take a look at some of these stocks that could be setting up. But before we do that, I want to remind everyone that these are not recommendations to buy or sell any security. As a matter of fact, you need to be doing your own due diligence, making sure you understand the risk of each and every trade. Make sure it fits your plan. Just because I may look at a chart and see it as a bullish or bearish condition does not necessarily mean it is a chart or trade for you. So remember, never ever blindly follow anyone else's trade ideas. Let's take a look at a couple of charts that I think are pretty interesting here. First off, I mentioned those casino stocks, and my goodness, we have had a nice little move here in a lot of the casino stocks, which is interesting to me when we're seeing consumer credit being so strained. We're seeing, the inflationary problems, expenses being high, but we're seeing a big influx or a big increase in travel and a willingness to go out and continue to drive those credit cards higher. So what we're seeing in here is a very bullish chart here on Wynn Casinos, moving on up, breaking through some resistance levels in the chart, breaking the downtrends. Any rest or pullback in here, I think, would set up an opportunity. And I can look at quite a few of these, and you're going to see the very same thing. Las Vegas Sands breaking through resistance, holding higher lows, looking pretty darn good. Penn National had a nice move up here. And pulled back a bit yesterday, but as you can see, holding on to some support in there, looking very bullish. Caesar's Palace also doing that same kind of pattern, very, very strong here to the upside. We certainly seem to be in love right now with gambling stocks, so and gaming stocks. Watch that. And then, of course, with the DKNG today, that probably adds some fuel to that fire. So watch those closely. Now, other places that you might want to be looking, I've been mentioning this stock in UPS, and that's continuing to set up and look very good. I like this tight consolidation in here. The tighter and tighter that consolidation comes, it means we can usually have lower risk entries on the trades. So I would be watching this for that potential move that might pop on through to the upside. Other places that you might want to look, take a look at stocks like CCJ. Interesting chart here. We're starting to see some of these alternative energies pick up here in the market. So watch that CCJ. I've placed a price alert on the chart. A little bit choppy in here, but it may rest the next few days in this area. I would look for that opportunity that might pop out, or sliding out from underneath that downtrend, looking pretty darn good. URA is another one in that sector. Uranium really starting to pick up and show signs of some bullishness here. So watch that carefully as these alternative energy stocks perk up. Take a look at Plug Power. Plug Power has really taken off here recently. Hydrogen is what Plug Power is all about, and you can see breaking downtrends, really tearing it up to the upside here the last few days. A little rest or pullback, I think, is due in that chart, but watch that closely. Plug acting very, very strongly, moving on up. You could also take a look at some of the solars. First, take a look at TAN. TAN being a solar ETF. Very bullish in this chart. We've popped through all of this resistance in the chart. Maybe we went a little bit hard, a little bit fast, and notice that we're popping hard this morning as well. Any rest or pullback in there, I think, would set up an opportunity. Take a look at First Solar. First Solar is another one that popped really hard. And part of the reason, I think, is the potential for that solar bill, or mean that energies bill, what they're calling, I can't remember what they're calling it, inflation fighting bill or something, that's just going to spend more money. But watch that closely, because a lot of these are getting pretty excited here this morning based on that. And those alternative energies looking really darn good here. So keep a close eye. So with that, guys, hey, I want to wish you all a fantastic day. I want to wish you great results in your trading. Thanks so much for being here. I hope you had a great week in trading, and I hope you have a wonderful weekend ahead. Get some rest, because we have a busy week next week with a CPI number and a PPI number midweek. So we're going to get that reading on inflation, and you can probably already feel that nervousness starting to roll up here in the market. So everyone, take care. We'll see you bright and early Monday morning. Have an awesome weekend.